A lot of investors I partner with have one major challenge. They are busy professionals that love to create memories with their families, but are too busy to actively look and find value-add real estate that cash flows. Hey guys, I'm John Fortes, and I want to partner with you. I provide investment opportunities through apartment syndications that allow my partners to invest passively so they don't have to worry about trading more time for money. If you are interested in creating passive streams of income, wealth creation, and all the tax benefits that come along with investing through real estate, I encourage you to fill out the form at www.investwithfortes.com. Invest today so that tomorrow you can trade money for time. Once again, that's www.investwithfortes.com. And I can't wait to partner with you.
Are you a busy professional looking to diversify your portfolio? Ever wanted to passively invest in real estate but don't know where to start? John Fortes provides you with a guide to passively invest in real estate. This is the Passive Investor Show.
And now, the Passive Investor Show. Here's your host, John Fortes.
Hello, PI listeners. Thank you for lending me your time today. Welcome to the Passive Investor Show. I'm John Fortes. Our goal is to provide you, the busy professional, with passive investing tips and tricks for your real estate investments to leverage more time for you to focus on your true passions. Let's get to work. Welcome, PI listeners, to the Passive Investor Show. I'm John Fortes. Our goal and purpose of the show is to be a resource to passive investors and help them master their investments in real estate funds. Before today's show, I want to start off with a disclaimer. Please consult with your personal accountant for any tax questions or inquiries. This is just for informational purposes, and I am not a qualified tax specialist. I want to discuss the real estate versus stock market. We'll be discussing the pros, and I'll be discussing the pros in real estate and then the pros in the stock market. Then we'll move on to the cons, which is the cons of real estate and then the cons of the stock market. Let's dive right into the pros. The pros of real estate. Real estate is easy to understand. Everyone can understand the process. It's basic and simple. You can purchase the property, manage the upkeep, manage the tenants if you own additional properties beyond your own personal residence, and eventually resell for a higher value. Owning a tangible asset can make you feel more in control of your investment than buying stocks. Then there's investing with debt is safer with real estate, right? So a mortgage is basically a financial partner in the form of a lender, bringing 20% or less to the table when you finance the rest of the property through a mortgage company. Margin trading is extremely risky, and that's for experienced traders when it comes to stocks. Real estate investments help hedge against inflation. Real estate ownership is generally considered a hedge against inflation, as home values and rents typically increase with inflation. Also, one of the 5 ways you are paid in real estate. Refer to episode 44 called The 5 Ways You're Paid in Real Estate for more information on that. There can be tax benefits to property ownership. Homeowners can qualify for a tax deduction for mortgage interest paid on up to a certain amount in mortgage debt. Tax breaks when you sell a primary residence to avoid capital gains on net proceeds, and it's different if you're single as opposed to if you are married. Investment properties can earn tax breaks through depreciation, in other words, writing off wear and tear on the asset. Now, here's the pros of the stock market. Stocks are highly liquid. Cash can be locked up for years in real estate, while shares can be bought or sold very quickly, almost immediately. It's easier to diversify your investment in stocks. Fewer people have the time, let alone the cash, to purchase enough real estate properties in a broad range of locations. You can build a diverse portfolio rather quickly in the stock game. There are fewer transaction fees with stocks. You can shop for a bevy of brokerage accounts and compare the fees. I won't go over that. You can grow your investment in tax-advantaged retirement accounts. 401ks accounts can allow your investment to grow tax-deferred or even tax-free over the years as you're contributing. The cons. There's a lot of great information about the pros. Now let's go into the cons of real estate, and then we'll move on to the cons of stock. Real estate investments can be more work than stocks. Though purchasing a property isn't easy to understand, it doesn't mean the work of maintaining the asset is easy, especially rental properties. Owning properties requires more attention and sweat equity than purchasing stock or stock investments like mutual funds. You can combat that by connecting with an experienced operator and investing in their opportunities. If you don't want to put in the time, or you don't have the extra time and energy of creating another job to take away from the other priorities in your life. Real estate is expensive and highly illiquid. Real estate requires a large upfront investment. Getting your money back out of the deal comes in either the form of two ways. It either comes by a refinance or selling the property. Exit plans should always be thought of ahead of time instead of just winging it. Real estate has a high transaction cost. Sellers pay significant closing costs compared to stocks. Real estate also is difficult to diversify your investments with real estate. Locations matter when investing in real estate. Diversifying in good areas requires more capital than the average investor has. The return of your investment isn't a sure thing. No investment is guaranteed, but personal home prices can be more volatile than multifamily commercial assets, which are steadily stable. Selling a property at a loss is one of the risks in personal and smaller investment properties. 2008 financial crisis reminded us of all of that. Same is true for stocks as well. Now, here are the cons of investing with stocks. Stock prices are much more volatile than real estate. Prices of stock move up and down much faster than real estate prices. Volatility can be gut-punching unless you are ignoring the market conditions and investing for the long term, known as buy and hold for the long term. Selling stocks may result in capital gain taxes. Yes, you can pay capital gains on stocks. Holding taxes for a year or longer can result in lower tax rate. You may also pay taxes on any dividends your portfolio paid out during the year. Stocks can trigger emotional decision-making. Think about COVID-19 and where we are right now, how the market is going up and down. Though you can buy stocks easier than real estate, it doesn't mean you should. Investors often sell when a buy and hold strategy produces greater returns. But we're human, and when we are thinking and coinciding with what the rest of the world is doing, we tend to make emotional decisions. So that is my pros and cons of real estate versus stocks. Basically, that is the pros and cons of why people either invest in stocks or choose real estate. I'm a real estate guy, and if you're listening to this, you're probably interested in learning more about real estate, or you are a real estate investor as well. So it's okay to diversify in both. I know many people that do, and it's all right. It's your decision at the end of the day, and always consult with the preferred specialist, whether it's your accountant, your CPA, a tax specialist. Just refer back to them and get their take on it. Thank you for listening, guys. I really appreciate you. And as we come to an end. Pains me to say this, but we'll talk to you on the next episode. PI listeners, I'm grateful for your time and I appreciate you for listening. For more information, go to passiveinvestorshow.com. If any of this resonates with you, please subscribe and leave a review. The more you know, the more we grow. Thank you for tuning in. Till next time.